Nervous about the volatility of public markets? Looking to invest in Canadian real estate but not finding the right opportunities? Neighborhood holdings may be an option. Nearly 10 years of consistent performance, Neighborhood aims to provide stable income while preserving invested capital, target net yield above 8%. At the heart of the strategy is Neighborhood's mortgage product portfolio of first position 100% residential mortgages across Canada with an average loan to value under 55%. Neighborhood partners with mortgage brokers and financial institutions to support quality borrowers in transition who may not currently qualify for traditional financing and have a temporary need for capital. Neighborhood's portfolio has no exposure to commercial, construction, or bare land properties, is geographically diversified across major urban and suburban centers in Canada. Check out the links in the description or visit neighborhoodholdings.com to view the offering memorandum for investors and advisors or to explore mortgage broker partnership opportunities. This is not advice. Please consult a professional advisor before investing a loonie in any of these investments. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to the Loonie Hour, episode 208. As always, joined with the three amigos, the Boomer over in Halifax, Rich Diaz in Montreal. Welcome back to the show, gentlemen. Rich, Habs, what are we, 6 days away, 5 days away?
I'm so excited. We're going to be so good. I know. I'm going to try really hard not to talk too much about it on the show.
Keith is shaking his head. Lane Hudson. Hey,
more interestingly is that I played hockey for the first time in like 10 years on Sunday.
You duct tape your ankles or what?
I did not duct tape. I've forgotten how to stop. But
That's what the boards are for.
I did score on my first shift, but to be fair, I'm playing in like the executive B league. And I think I might be at 40. I think I'm like the youngest. There's a guy who plays, I swear to God, he's 80 years old. And he's like, he just like lumbers at the blue line and he can barely move.
Sounds horrible.
It was really
Is it
fun.
Mark Carney? Is Mark Carney on the ice?
No, if he was, I would check him into the boards. No, it's great. It's great. Everybody's very nice. It's actually, there's some people who are really good. Like some of the older guys are really good. It's my first time in 10 years. Next year I'll play in like the more, let's say, physical league.
Rich fails to say the goal he scored was off his shin pattern.
It was fun. Go out, find time to exercise, everybody. It's very important.
Keith?
Let's see. Oh, hey, yeah. Mrs. Icecap and I were down in the valley in Wolfville, Nova Scotia, a few days back. And we bumped into a real nice young man, Gavin, who was there. And he follows the podcast all the time. He was very nice to us. And so a little shout out to Gavin, to he and his friends down in that part of the world. So yeah, it was a nice weekend for us. Now we're heading more into the fall. No hockey for us, Rich. No, I don't even know what Steve does anymore.
Well, the 49ers suck.
There's no 49ers bets yet this year. So
I know, it's because they're terrible.
Yeah, we're used to Keith's weekly predictions. Maybe we'll get back into that. But we got lots to chat about this week. We had last week after we hit record, we had some crazy commentary from the PBO, the Parliamentary Budget Officer. We'll get into that. Quebec EV mandates, the UK digital ID, US economic updates. We got some housing stuff. We got everything. So it's been it's heating up as Keith we've talked about as we head into the fall market here. There's lots going on. So there's sort of a recurring theme that we've talked about just on the housing side of things. It's just how bad the new development space is, that it basically ceases to, it's actually just like not functioning at all right now. So there was another layer of data coming out from Altus Group, which does all these sort of new home surveys. It's like a private entity that basically goes out and collects all the sales data for these developers, not only in the GTA, but across Canada. So they say there's basically been no uptick in new home sales in the GTA. There was just 300 new home sales in August and across the entire GTA, which was 81% below the 10-year average. And It's even worse in the new condo market, where there was just 118 units sold in a major metropolitan city of nearly 7 million people. 118. This is the craziest part about the stat. So year to date, January through the end of August, there's only been 1,300 condo sales in the entire GTA. New condos, which is down 90% from the 10-year average of 12,800.
I have a question before you go on. How many realtors are there in Toronto? Are there more or less?
It's like 50,000.
That's so crazy.
There's more realtors than there is school teachers in Ontario. Or GTA? Ontario. Anyways, there's a lot.
That's
in Vancouver, we have like 15,000. Then if you include the Fraser Valley, like you get to like 20,000.
50,000. So half 100 realtors.
Keith, I gotta add though, there's a lot of of that number. There's a lot of people that just have their license so they can like get access to like the back end system, and they will never transact a deal. I think it's like, I think like 2/3 of them don't transact.
Okay, but even then, if it was, let's say, what's 2/3 of 50?
Loonie Hour math.
Way too many.
That's like, let's say 20,000 or 15,000. That's crazy.
So there's and then so following that, there was like there's a media release, and the headline says, "Government intervention required immediately to avoid a severe housing downturn." And this is from Build Canada, which is like, obviously it's like an agency that represents builders and developers. And they say new launches, in particular high-rise projects, over the past 12 months have been at a record low. And at the same time, completions have reached a record high. As further projects reach completion, new home tradespeople are becoming increasingly at risk of not being able to find employment, and therefore joining the growing number of Canadians without work, putting additional strain on the economy. With pre-construction inventory dropping dramatically, the signs are clear that the new residential sector in the GTA is basically stopping. Greater Vancouver is also seeing 1/3 of its normal activity and will soon be in a similar place. And many other Ontario markets like Ottawa and the Kitchener-Waterloo area are struggling. And we're now even seeing some troubling signs in Calgary. Why is the government ignoring these obvious warning signs?
It's not for the governments to bail out every industry all the time. That's how we got in this fucking mess in the first place. Sorry to say, but it's true.
I don't disagree with you, but I think it's like literally like it is like flashing red all over the screen. We have there's like no new housing sales in the GTA. Period. Like it's just totally dead.
So we keep talking about the trend all the time. Is it continuing? Has it stalled? And obviously
the trend is the same. Yeah, it's brutal. It's just
it's not getting better. It is grinding lower. And we have a lot of conversations with families across the country, and everyone is sharing the same anecdotal stories as well. That it's getting tougher for certain tradespeople to get a job or to continue. There's concern about hours and things like that. So this is happening. We've yet, though, seen the big company mass layoff notices. We're getting some. I think we'll talk later. I think Exxon has announced some layoffs in Canada. But we continue to go down, and this will have big, repercussions, across the country that we're moving towards. So it's by the way, everyone, we started our call today, we all got on, and talked about Steve's lifestyle and everything, how it's different now with a family. And without even continuing that conversation, Rich went into this rant about how pessimistic he was about everything in the country. Do you remember that, Rich?
Yeah,
we'll get into that.
Yeah. But wait, before we get into that, can I ask a question?
Yeah.
My question is, last week I did a video on housing on my on my ice cap thing, which is, I know I got out of my lane, but I just, it was that time. Twice a year I'll talk about housing on my channel. So surprisingly I didn't hurt myself. But what I did find was an article from the CMHC. And it actually suggests that they're calling the bottom, Steve. And I was just wondering, which I thought was really funny. And I was just wondering,
I
like,
didn't see that article.
well, I mean, basically, it said that the condo market downturn has worried. It will echo what we observed in the past. Several factors point to a softer correction and less severe outlook than the 90s crash. And I was just wondering what you felt about sort of like the view that that everything's going to be just peachy and everything's going to be
That was
fine.
written by the 25-year-old kid from, is it Castanoga College?
Yeah, that's right.
Yeah. I mean,
the 90s, the 1890s, 1790s. People don't even realize the 90s even existed.
Yeah, Keith, obviously I was not operating in the real estate market at that time, but I don't know. I've talked to, a lot of gray hairs that have been around in the industry through 30, 40, 50 years. And some of them think it's worse today than it was in the early 90s. Yeah, I don't know. I just think when you go from like a massive housing boom, which is like record construction, to basically like ceases to operate, I don't know. I think that's just such a dramatic shift that, I just think I do worry that I don't know where these construction workers are going to go. I don't think the industry, that pre-sale new construction condo market is not coming back in the next 12 months, 18 months. It's going to take time. It's just like, I just think there's an air pocket where it's like, because what happens is like, Keith, you need the pre-construction market is like 80 to 90% of it is investors that basically operate in that market. They fund they fund the pre-sale targets to get the bank financing to build the housing. And so how do you convince the investors to jump back into the pool when the outlook for returns is pretty bad, right? Like rents are declining. There's no population growth. Pre-sales are overpriced. There's too much supply. Like, how
that's what the argument that CMHC made in the article, and it was published on September 24th, if you want to look it up, guys, which is that they, that it's the supply, the new supply entering the market has already been largely absorbed, and that going forward there'll be like a supply crunch that didn't exist in the 90s. So
I think oftentimes, like, I'll tell you this, and I'm sure they're good people over there, but like, you can basically, whatever CMHC says, usually do the opposite and you'll make money. It's just like a bunch of PhDs that sit in a sweaty office that aren't on the ground, like, operating. And I don't know, it's just one thing to like sit there and pontificate in a spreadsheet. It's another thing to actually like roll up your sleeves and invest your own capital. And then I think it puts you in a different perspective. But
spreadsheet, schmedsheet, they don't work sometimes.
Well, these guys are the same guys that said, we need 500,000 homes a year to hit these targets. And if we hit them, prices will drop 30% and everything will be affordable. But like, in reality, that's not how the markets work. That's not how capital markets work. No bank is going to go finance a new development when prices are declining 10% a year.
So you made a good comment, like the way this works, it doesn't work. It should work and everything. I was having a conversation with a gentleman the other day. He said the system doesn't work. They need a new system. And I would argue that we are going to get a new system coming up. But in reality, the current system does work, except policymakers from both, central banks and governments, they're not allowing it to work.
Right.
And by allowing it to work, this is what, Steve, cover your ears. It's going to hurt your industry. There we go. They need to have losses taking place. Like, they absolutely need to have it. And nobody wants it to happen. So therefore, we're in this sort of suspended animation. People are, you just described a situation where, wow, it seems pretty unlikely that real estate focused or centric funds, contain very low risk. I would argue they have a lot of risk tied up in them right now. But until it happens, you can't see it. But I'm not hearing anything to say, yeah, I want to, go all in on this kind of investment in that world. And we even though we're continue to grind lower, we're getting the lowest new condo sales in the GTA, I think you said a decade. I think you said something like that. The losses are still on the books. They're still there, and they will be recognized. It will happen. until it happens, everyone will continue, oh, it's just a gully, let's keep going. That's the same for equities and, commodities, all that world. And then the moment after it happens, Rich, what's everyone going to say?
I told you so, or I knew it was going to happen. Or isn't that
Yeah,
obvious?
it was very obvious it was going to happen. So, we are, that's the path we continue to go down here. It's not pleasant. People don't want to hear it, of course. But at the Loonie Hour, we tell you the truth.
Even when it hurts.
Love hurts.
To kind of round that out. There was a good article in the CBC, I think it was yesterday. And so the president of Rennie, which is the largest pre-sale marketing firm in Vancouver, says basically the last time we saw this level of developer-owned unsold inventory was 24 years ago. So basically what it's saying is, like, he's saying the amount of units that are sitting on developer balance sheets that are unsold is the highest it's been in 24 years. So again, think about this as a developer. If you have all this existing stock that's sitting on your books that you cannot sell, you cannot get rid of, the last thing you're going to do is try to go out and launch another new project and try to sell another 200 or 400 or 600 units. So these guys are just trying to get rid of what they've already got. And it goes on to say that he says, we need to get to a point where we can deliver inventory as an industry in the province of BC at 700 to 900 a foot, which he says is 200 to 300 above where the market is today. So basically, he's like basically nobody wants to pay these prices. They're above the resale market, and the resale market's declining. How do we get the cost of new housing down? And I would argue you obviously need a good purge, a good cleansing, where the tradespeople take less, the material costs come down. You need government to reduce their fees, right? So there was an announcement from Housing Minister Gregor Robertson was at a conference last week saying that we're looking at an approach to roll out later this year that will strike a balance of reducing development charges, but also making sure that local governments continue to invest in the housing infrastructure we need to build homes. So the government, this makes sense logically, because 20% of the cost of a new home in Vancouver and Toronto is basically just development fees and taxes. So
you can't have that. Let's just go down that little rabbit hole.
This is 100%.
So let's just say they say, oh my God, you're so right. Let's eliminate all these taxes and fees and
Hallelujah.
stuff like that. Yeah, it's done. Now all of a sudden, who has a giant hole on their balance sheet?
The government.
Yeah, of course.
Or the local government.
Yeah, it doesn't matter what level it's going to be. And they're sitting there saying, oh boy, we need to do something here. And that's the point. Everything is tied together. Nothing is packed together in isolation. Totally. But the burden, with government will never look in the mirror and say, is that you, Baz? No, they're going to look in and say, because, they'll never look in the mirror and say, oh my God, we're the problem here. Instead, it's the private sector. We need more taxes, more service fees, more regulation. We're going to get this turned just right. And you got to just cleanse the system. We need a big, big thunderbox. Is that what you call it?
We should have a Loonie Hour event at a spa so we can cleanse our system. We'll do a facial cleanse, and then we'll go to the toilet.
Keith, this is the point. That's
just weird, right? Rich. That's like the worst joke ever. Steve, please continue.
This is the whole point, though, which is to say that everybody has milked the cow, right? Everybody has gotten fat and rich off of housing and real estate. So as the developers made money, as the investors made money, as the boomers that own their houses made money, everybody just milked this thing to the point where it just became so large and excessive. And now obviously that's everyone's saying, okay, we should probably wean ourselves off of this. And we're now going through the consequences of that, which is to say, again, the governments just continue to raise their taxes and fees levied against housing to basically pay for all the budgets that they were running. And now that, when you have a 90% decline in pre-construction sales, I mean, where's government going to get the revenues moving forward? And so this kind of ties into the comments that we saw from the PBO this past week, the Parliamentary Budget Officer, which
Good
effectively
segue.
said that it's a mess. Rich, I don't know the exact words he used, but
I do. I know exactly the words he used: unsustainable, shocking, stupefying. If we don't change, this will end, I think he said at one point. It was, we give more context, I think, Steve, but just like it was.
yeah. So basically, I think he was in the.
But he clearly sounded like a guy that knew he was in his last week of his job.
Yeah.
Apparently, he's like an interim. He's in the interim role.
Yeah.
I don't know. So
Well,
people
he's
are like,
certainly
well,
not
this
getting a
guy's
job now.
well, yeah, people are like, this guy's being dramatic. Like, and I was like, well, again, the PBO is an independent agency. Like they don't, there's no partisan link to any party. So their job is to strictly look at, the budgets that are released and put out their own forecasts. And so I think he was in the finance committee, and basically, if you've watched the clips online, it's like everybody's, grilling him, and, the Conservative Party is obviously trying to like get the sound bites they want. The Liberal Party is trying to get the sound bites they want. But it was pretty funny because I think the Liberal guy was like, well, like don't we have one of the lowest like debt to GDP ratios in the G7, like the classic thing that we joke about, which is Krista Freeland and the G7, and we're number one.
So stupid.
And basically the PBO guy was like, well, listen, like, if your friends are 500 pounds and grossly overweight, and you're only 400 pounds overweight, like, I guess you're better off, but like, you're probably still going to die pretty soon. It's effectively what he said, right? And so I don't know, just the whole conversation obviously was like viral all over social media. Mainstream media was covering it. That PBO officer was on all these interviews. Because I mean, I think the direction that it's going.
And by the way, he was absolutely correct to come out with all that. The way he expressed the data that he saw. I don't know if we sort of implied he wasn't right to do it in the beginning of this conversation. I think he was. The country needs to hear stuff like that, because the numbers are coming out, boys. Like another.
Oh wait, but there's more. There's more.
And Rich, so let me then you jump in. But like, I think the PBO's estimates. I think this is why it all started this conversation. Is I think the PBO's estimate is the budget deficit. I think they had estimated like 67 billion. I want to say it was the number
68.9.
68.9.
60.8.5. Sorry.
Obviously, we've heard rumors and speculation that it could be closer to 100 billion when it gets announced here in November. But the PBO is saying it's high 60s. So that is still obviously a very large number. But Rich, you chime in.
Yeah, I mean, there's a couple of things. I think the other thing that there's a bunch of stuff I'm just going to rattle off quickly. Number one is obviously, as you pointed out, there was a couple of things that were not included. And Trevor Tome, professor of economics at University of Calgary, he came out and he sort of added on to the PBO's estimate, which included some other campaign platform commitments that were sort of excluded from the PBO's numbers. So that's the first thing. And that number is much closer to $100 billion. So that's one thing. Second thing is one of the reasons they talked about being unsustainable, because to her credit, you won't hear this often from me, but to her credit, Krista Freeland, when she published her budget estimates, at least the debt numbers to GDP were falling. Now, of course, they were always bogus, but at least they give you a good lie, so to speak, which is the numbers in the charts in every single budget would show the forecast for debt to GDP falling. So according to the PBO, this was, I think, the first time, or it's been in a long time, that the debt to GDP numbers, according to the PBO, which has a conservative estimate of the deficit, the numbers for debt to GDP were rising. That's the other, and so that was one of the things that his name is Jason Jacques, who's no dummy, by the way. He's been there for 17 years. He's got a master's in economics, CFA, CPA. So one of the things that he argued was like we are on an unsustainable path, which is to say that these numbers are getting bigger. And the other thing that's really important is that and I think I'm going to steal this from Keith, but he's taught me well, is that the PBO never forecasts a recession. And so on table 1, you have a summary of the economic outlook for Canada, which they then base their projections on revenues and expenses, and ergo the deficit, and they base it on those numbers. And so you'd have the things that they base it on are real GDP growth, unemployment rate, oil, inflation, and the Bank of Canada's policy rate. And if you look at years 25 and 2025, okay, 25 is basically done. But if you look at year 2026, it's actually a benign economic outlook. They have unemployment at 6.4%. Okay, I'll take the over on that. And they have GDP growth at 1.3%. I'll take the under on that. You know what I mean? And so their projections, which are shocking, stupefying, unsustainable, on a bad path. The other thing that he said was that it appears that our government has no fiscal anchor. Those are his words. That's all based on an extremely benign economic outlook. So all we need is a non-benign. So there's 2 options. There's 3. It could get worse, it could stay the same, or get better. Again, my suspicion is that unemployment will be much higher, for all the reasons we've talked about at length on the pod. But so that means that the deficit, by definition, the conservative estimates that they outlined, which are already unsustainable, are going to get way worse. And so, I mean, I'm actually really proud of this guy, because he's on an interim basis. He could have, if he wanted this job, he could have just come out and towed the party line and given the dear leader exactly what he wanted. And he did, I think, all of Canadians a favor. And he's due a lot of credit for coming out and saying that we're on the wrong path and that there are some significant, I don't know how else to say it. We're on the wrong path.
Maybe you should invite him to your beer league hockey night.
My spa day.
yeah. It's but that's the point we keep making all the time. Like these numbers they're god awful. But what happens if this economic decline that we're seeing, that we're hearing with anecdotal, stories, as well as the hard data that's coming in, if the economy does deteriorate further, that these numbers get completely blown out of the water, which means you have to borrow even more, issue more debt at higher rates.
You're really selling me on owning some sovereign debt, Keith.
Yeah, but there's one more thing. Sorry.
So which one would you buy though, hey? Which one would you buy? 21. Think of the repo market. That's the one that you want. Go ahead, Rich.
One more quick thing. The other thing is that I forgot to mention was the rising interest payments. So this is something I've gone on and on about on my channel, but maybe I should do it here as well, which is the interest, because we are in a different world, e.g. the yield curve has risen globally, and I would argue is probably going to continue to rise, even in a shitty growth scenario, which is new. You have all this debt that's owed, and that's about $500 billion at the federal level, is about a third over the next basically year and a half, 2 years, will have to be rolled over, plus the new debt that they're issuing, again, even in their benign scenario, means that the interest payments are going to skyrocket. And let's keep in mind, they're already basically at the same level as the the federal health transfers to provinces or whatever, which is about 52 odd billion. And so and then one last thing, sorry, which is a chart that I stole from Stéphane Marion, which is brilliant, which is that Canada has a record exposure to non-resident investors in our bond market. So, we're not so that means that we are highly, highly sensitive to the foreign investor sentiment that owns the bonds that we're issuing, and that literally our PBO, our fiscal financial watchdog, is telling us that we're on an unsustainable path. I mean, I think a sufficient deal was made of this. A sufficiently big deal of it was made of. I can't even speak. But the point is that nothing will change. I think that this will not change the opinion or the view of the current government. I think that will continue with their ideological path. And I think all Canadians should be rightfully concerned, as Mr. Jacques pointed out.
So part of this, and just to summarize here from Trevor Tomes, sort of estimations he says, I find cumulative deficits over the next 4 years will exceed 360 billion, which is almost triple what last year's budget had anticipated. The PBO projections indicate that interest costs alone may consume 14 cents of every dollar in government revenue by 2030, or nearly 16 cents of every dollar in taxes, to service the interest on the debt. Now, one way to sort of help alleviate the tax or the interest burden, Rich, is obviously to grow the revenue side. I think that's the Carney government's argument, is that, we're making historic investments, right? We're going to build
revolutionary. Why didn't they think of that before?
Just split it up.
Just grow faster.
But that's the point. So to directly address that, I addressed that in my video tomorrow, or today, whatever. The point is that federal tax take. So the federal revenue per year, which right now, is about 470 odd, is 500 billion, is at relative to GDP, is at a 25-year high. We already are, the federal government is already taxing Canadians, right? If revenue is basically just taxes, that number divided by GDP is at a 25 or 23 or whatever year high.
So what are you saying? There's no more juice to squeeze.
I'm just saying, the point is, the problem is not the taxes. The problem is the spending part. And that's what Canadians, this government doesn't want to tell Canadians.
Rich, can it not be the revenue side, though, to play devil's advocate, which is to say, if you actually get major infrastructure projects built.
Oh, right. So the growth.
Major energy infrastructure projects built.
We'll get to that.
Revenues coming in.
Right. So your point is, if we just grow the pie, then does this budget balance itself?
Well, yes. We've been trying to grow the pie, obviously, through residential housing. Clearly, that's not the solution or the answer. Right. That industry is dead.
So yes, in theory, if the economy grew really strongly, then these budgets wouldn't look as ridiculous as they are. The problem is, I have very little faith, and this is why we talk about productivity all the time, because you need to improve your productivity growth. The problem is, we have a bunch of things going against us. One, we have a government that's insistent on keeping shit in the ground. Two, we still have no trade deal. And I would argue that any deal is better than no deal, because businesses abhor uncertainty. And three, there isn't any recognition that the government is full stop part of the problem, as described by many people like Stéphane Marion, who's somebody who we'd love to have on the show, who constantly goes after the overregulation in other industries outside of natural resources, like manufacturing, et cetera, et cetera. And so I have very, very little hope, frankly, sorry to say.
So, but just listen to what we're suggesting here, is that the current Canadian government has all of a sudden realized that if we grow our economy fast enough, we can grow our way out of this debt problem.
Sure, maybe.
Well, my point is that every government on the planet has always had that strategy. No one has ever said, oh my God, we haven't thought of that before. We should do that. It's going to work. It's, you can have all the best intentions available. But in Canada, as well as across Europe, our focus on climate policies and on immigration, the same thing what the Europeans have done, and same with the Americans and everyone else. It's just created this enormous explosion or a collision that's taking place across a whole bunch of different factors. And until we're trying to close up the whole immigration thing that's happening, but the climate stuff has not stopped. And until that happens, how are we going to grow our economy? Can't do it through housing. That doesn't work. It has to be the energy sector. And nothing is coming out of Ottawa right now to say they're going to remove these caps, on carbon emissions. So it's highly, the only other way this works is that they are able to grow. Same with the Europeans, same with the Chinese, the Americans, and everyone else. And we're able to grow all at the same time. That's where you come on this sort of financial bazooka theme that we've been talking about. But it means, though, of course, that you avoid every kind of a debt crisis or trigger point along the way. Maybe that's what happens. Maybe that's how we grow our way out of it. But there's a lot of losses in this system, guys, and they just have to be realized. And the expectations for an economy to go through this with no recession or slowdown without some big creditor, all of a sudden they just, fall to their knees and topple over. Because that's the next step we're looking at. I don't know the solution. People say, "Oh, you guys are complaining all the time. You're pointing out what's wrong." And yeah, absolutely, absolutely. The solution to this stuff, though, we do have to have losses cleansed, but no one's willing to do it.
There's really you nailed on something that I really think is worth repeating, and it's something that Steve has said before, is that these sugar high, this fake growth, and I describe it with labor force growth, and this credit binge that was devoted to housing, those are over now. And I'll tell you, like the 10-year compound annual growth rate of GDP in Canada is 1.8%. Okay. 1.6 of that was population growth. 0.2% was productivity growth. That is not a sustainable way to grow an economy from a social perspective, but certainly not from an economic perspective. Because once the social comes to a fever pitch, which is we're all realizing that now, everyone slams on the brakes on the population growth. And what do you have left? You have nothing. You have basically 0.2% productivity growth because we haven't been investing in machinery, plant, and equipment, energy, oil and gas, natural resources, manufacturing, and all the stuff that improves labor force productivity growth. And the second piece is that this what's it called, real estate sugar high. Sorry, Steve, but we're picking on you today. But like that is over now. And so that is like, that's been this credit binge that we've seen in the housing sector, in the government sector, and in the non-financial corporate sector. I think that's largely over in Canada. And so that's it. That's the bottom line. And these guys are just unwilling to course correct for some reason. I don't understand why they just won't do what needs to be done. Ideology, Keith. I don't really know.
Well, speaking of ideology, we have so an announcement was made this week from the Alberta government. Premier Daniel Smith, who's been on the show, friend of the show, the province announced Wednesday that it will commit $14 million to the proposal of a new oil pipeline to the northwest coast of BC. So she wants it on the major federal project list. And she wants that on the list. I think she was saying by November. So the the Alberta government is, of course, going to spearhead that to try to ultimately they need to attract a private investor, a private entity that will actually go and take it from there. Of course, the people will say, we have Premier David Eby coming out and saying, well, there's been no private entity, company, corporation, whatever, that is willing to sort of take this on, has stepped up to the plate. And Rich, you and I will probably agree that the reason why nobody has stepped up to the plate is because they're aware of the regulations that are in play, emissions and production caps, all the First Nation stuff, getting them on board. It's just like the regulatory hurdle to jump through. Like, you're going to make a private corp jump through a litany of regulations, and it's you know what I mean? Like, you have to sort of lay the groundwork for these investors. Like, it has to be a favorable condition to say, is this worth me taking the risk?
It's kind of like this Atlas Shrugged moment, coming up.
Great book.
And yeah. I encourage everyone to read it if you're interested in that. But tied into this, so Exxon, they announced big layoffs this week or last week. They announced it. I think there's 1,000 jobs in Canada, 1,200 from the EU, very little in the US. And you say, why? Why? And Exxon's a global company. They are based out of the US. And it's not because they're afraid of cutting jobs in the US. A private company, they're always trying to, maximize profits all the time. But one of the reasons they're reducing headcount in Canada and the EU is because of their climate policies, which is very negative towards the energy sector, which is Alberta is fighting here as well. So until a private sector, they do jump in and say, yeah, we're all in on a new pipeline or something like that. Then it's turning. But that's what we need to watch.
It's a culture problem.
Yeah.
And that's like, Rich, I mean, my view.
What do you mean
anyways,
culture? You mean from the political side with climate?
I think it's a culture problem in Canada. Is like we demonize businesses and investment, and it's just you don't have favorable. Like, why is the United States like you have all the greatest companies in the world? Because like they breed entrepreneurial spirit. That's just like ingrained in their DNA. And whereas I think Canada here, I mean, under the last government, in particular under the Trudeau government, he basically villainized small business owners, saying they're all tax cheats.
Well, where I'm in Nova Scotia, when I tell them I work for IceCap Asset Management, they say, "What part of the government is that? Which department is it?"
There's no entrepreneurial. Okay, let's put it this way: if you are a like young hustler and you want to start a business, like a lot of the good talent leaves Canada and they go to the United
of course.
States.
There's articles about that all the time.
Like it's just we just don't have the framework and the DNA to really encourage starting a business in Canada. Like
there's another,
and it's hard to change culture. It's really hard to change culture. It takes a long time. It's generations to do it, and so forth.
There's another angle. There's another C word that I would use, which is complacency. I mean, the fact is we do produce a lot.
That's your C word? Complacency?
I wasn't going to describe David Eby. The truth is that we do actually produce loads of oil. We produce 5 million barrels of oil in Canada. We only consume about 2 and a bit. And that massive, like sustained injection of hard currency supports our current account balance. And we effectively sell oil for goods. And if it wasn't for that, in a world where with zero productivity, massive debts, huge foreign ownership of our bonds, and massive deficits, we would be force-fed some kind of devaluation, either an internal one, where you're force-fed austerity to make all these numbers work so that people want to buy your bonds, or we would be force-fed, just like in what happened in Greece, or we would be force-fed an external devaluation where your currency falls, inflation goes up, your fiscal austerity, and so that people will buy your bonds, basically. And so that and it's because it's weird, because of this oil, we're allowed to consistently make all the wrong decisions. And it's amazing. It's the same thing they're attacking. It's wild to me. The whole thing just it blows my brain out. I don't understand.
Well, again, obviously, the day that Alberta announces they want to push a pipeline, they're going to spend $13 million to do it. David Eby, Premier of BC here, was interviewed and basically says, we don't support this. And we are fully behind the tanker ban. We want that to continue. We want no pipeline. So, you know what I mean? It's like, it's so much, and again, we talk about, you hear all these governments say, oh, elbows up and, we need to fight the Americans and, we can be independent on our own, but yet, you shut down these major infrastructure projects. So yeah, I mean, that guy continues to be, I think, the biggest disappointment.
How is the budget looking for British Columbia these days?
Oh, let me tell you, Keith, it is a record.
Come on, give it to me. Give it to me.
It's a record budget deficit. We know that. And so I'm just pulling it up here on my screen. So the provincial budget in British Columbia, the tax supported debt is going up by $53 billion over the next 3 years. Debt servicing costs are increasing by over 300% in the next 3 years. And
that's with no recession, of course, for all those estimates.
So just to add to this just gets better when you kind of like go through the weeds. So they have the record budget deficit. Part of this they blame is because they've lost all the carbon tax revenue. Remember, they were forced to remove the carbon tax, so that impacted their budget. But they also booked a revenue charge on a tobacco settlement up front to sort of, anyways, to make the numbers look a little bit better. So the long story short is the BC deficit is truly horrendous, and it's kind of going back to, I think it was the 90s there under the last NDP government, where the deficit took decades to fix.
So we should start tracking. We'll put this on Rich's desk because you look like
Let me write it down.
like a guy who would track this kind of stuff. But all the budgets coming out for the provinces, because it's one thing to have the federal government to be having a bit of a fiscal challenge here. If the underlying provinces are healthy, then that's great. But I would imagine that the net effect of the provincial budgets are equally as bad as what's coming out of Ottawa as well. So Nova Scotia, we just had our budget came out and it was like kaboom, pow, smack. It's a pretty big deficit number that they produced. And another, I know a lot of times, and I always cringe, Canada's debt to GDP, it's 60% or something, the best in the G7. When you search that number, it only includes federal debt. It does not include provincial debt. And people say, well, why is that a big deal? Well, so first of all, if it's debt over GDP, Rich, how do you, for the GDP calculation of Canada, if you're going to exclude provincial debt, how can you strip out provincial economic activity?
Yeah, of course, it's ridiculous.
Yeah, of course you can't do it. So you have to add on provincial debt as well to get to a better number. So for everyone in Ottawa who keeps coming out with a 60 plus number,
It's 40. It's 40%.
Okay, 40, whatever. Guys, it's totally incorrect. You're just gaslighting people by saying it. So you have to include the economic health of the provinces, as well as the debt loads of the provinces, because the debt loads are pretty significant as well for all of Canada. So BC is done. Nova Scotia. Rich is going to get some more data for us for next week.
But there's one more thing, Keith, and there's two things I want to just point out. One is there's a real world application. The reason and I agree with you, Keith, that I insist that we include the full number is because ultimately, let's say the British Columbia continues to run a massive budget deficit. David Eby bans working and driving and doing anything constructive. And there's a buyer's strike on the bond market for British Columbia. And you say, well, can this happen? Well,
actually, they've already gapped up. They've already gapped. Their spreads have already actually widened.
Yeah. So in Newfoundland, which is, I understand, a much, much smaller and less dynamic economy than British Columbia. During COVID, which I understand, again, is an extreme example, but it proves the point. They went to market with their bond issuance, as they would normally do, to roll over their debt. And during COVID, there was a buyer strike. No one wanted to buy it because everybody thought it was going to be a zombie apocalypse. Right or wrong, that's what happened. And the Bank of Canada had to step in basically and basically financed Newfoundland for a week, a month, a year, whatever it was. And who's the biggest shareholder of the Bank of Canada? You and me and the federal government, et cetera. And so that means ultimately the federal government is the lender of last resort for these provinces, whether they like to admit it, whether we like to admit it or not, it is. And so that's the bottom line for that. And the point is that's it. It's just people need to wrap their head around it.
Sounds like we sure need a central bank digital currency.
Please, no.
Well, we're
maybe some IDs then. Maybe some IDs as well.
Well, yeah, we'll get there. So basically, just to kind of round out the conversation, we hope that Canada and Alberta and BC can join hands and sing Kumbaya and get it all sorted out. I think we're not overly optimistic here on the show. We hope that they can figure it out, but I think the political rhetoric continues to be driven around ideological views as opposed to, economical reality. And what we're seeing here is from, you look at the power. Bloomberg put out a really good report this past week, just showing the power demand from AI data centers. So right now, Bloomberg is estimating. Bloomberg's really good at this stuff. Bloomberg is estimating power demand from AI data centers will quadruple over the next 10 years. So the need and the demand for energy is going to be significant. And obviously, we believe Canada can and should be powering most of that innovation. That's our competitive advantage. It's not, building and selling houses to investors and
It's a
immigrants.
lot of windmills, man.
A lot of windmills. So we'll see. But Keith, I mean, it kind of makes you wonder, right? Because we've talked about this and a lot of these estimates of the PBO and the deficits, and a lot of them are sort of on the hope and optimism that there won't be any recession and there's gonna be no hiccups and we'll figure it all out. And I know at IceCap there, believe it's going to be a bouncy ride. It's going to be volatile. And sort of how do you keep society in a straight line? And we've talked a lot about the UK and the issues that's going on over there in their bond market, in their social unrest. I think there's quite a bit of angst around immigration and crime. And now we've got the government solution, of course, has been lobbied throughout, which has been, we need a government central bank digital currency, and recently announced a UK digital ID. Rich, you want to, as a former resident of the UK, can you tell us what's going on over there?
So this is not a new thing. There's nothing new under the sun, only what's been forgotten. And this actually started with Tony Blair. I can't remember what year he did it in. But anyway, I think it was in 2003, whatever. So this has been a long time. This has been like sort of a labor backbench idea that became front bench. And there's like two ways to think about this idea. One is like a dystopian, nightmarish way, which I think I'll allow Keith to elucidate. And the other one is sort of the pragmatic piece. So I'll give you guys the pragmatic piece, which is this idea quickly that, you basically just have, instead of having a driver's license and a birth certificate and a passport and a credit, a credit rating and whatever, all this other gun license, well, they're going to take those away too. But anyway, the point is you basically just have a digital ID on your phone, and that proves your ability and right to live and work in the UK. And I say live and work because that was sort of the rationale that Keir Starmer gave to the British public as for the reason they needed the ID. So people are really upset about illegal immigration, these fake asylum seekers, all these migrants that are coming across the English Channel via dinghy. The Germans should have thought of that instead of spending all that money in the Luftwaffe. Anyway, the point is that so there are people getting antsy. They're being, from a political standpoint, he's losing an incredible amount of support to Reform and Nigel Farage, which is like sort of the come up right wing party that's basically just attacking labor on these illegal immigrants. And so Keir Starmer is arguing that in order to prevent illegal workers from taking jobs, that you need a digital ID. Now, Keith, I'll allow you to put your conspiracy hat on and tell us why that is an absolutely terrible idea.
Well, it's not a conspiracy. I mean,
I don't think so either. I think it's real. It's a horrible idea.
Yeah. So, like, I have my views on the way things. So you have private citizens, which is what we are, and then you have public servants, and that's government. And so if this gets set up the way that it will likely get set up, all of a sudden the government will have access to everything you touch. So all of a sudden you're going to end up getting a social credit score. And this is the point where, the Woken male, sorry, the Globin male,
just lost that sponsorship.
Yeah, we just lost that one. But my point is that governments are trying to increasingly know more and more about you as a private citizen, when in reality, they should know nothing about you. That's being a bit extreme. And instead, instead it should be the opposite. As a public servant in government, we should know everything about you, what you're doing. You're literally a servant for the people, for the citizens, instead of being turned around the other way. So there are some really like god-awful stories taking place in Britain right now where people are literally being arrested at home for tweets and memes and stuff like that. It doesn't matter if you like what they tweeted or dislike it, but the thought police is alive and well. And by going down this digital ID, it is that one step closer because it will get linked to that digital currency, of course. But like at the extreme end, they're going to be able to limit what you're able to do. So in Canada, there's a huge movement in Ottawa, of course, that we should only consume so much energy. And it has to be the good energy. So if you have a gas consuming car, you're only going to be able to buy so much gas a week and things like that. And people are saying, "Oh, Keith, you're being crazy. We're not there. We're not there yet." This is where all of this is going. So with the Brits coming out with this, you have to ask, why are they doing that? I mean, they have so many problems there in Britain right now. It's just another way that the government is actually acknowledging, yeah, we have problems. And let's try to restrict what people can say and do and speak. That's what they're going with this. And the rest of Europe is going down that same
They're
hole
trying to manage
as
the
well.
social unrest, Keith.
Yeah, absolutely. I mean, the problem, the challenge that the Europeans have is they've gone down to this climate road, and it's as Rich you've shared before, it's completely gutted the German economy. It literally has. And they've literally opened the borders to mass immigration. Like literally open the gate, everyone's coming in. In Canada, because the way we are geographically, we don't have that challenge. We've had a lot of immigration happening, but they're literally on planes and stuff coming in, which is different. But their domestic economies are failing, so they have to find some kind of an external enemy to try to let's control things first and whatever. So, Trump's speech at the UN a couple of weeks ago, I don't know if we mentioned this last week or not, but he said a lot of things that really rubbed the Europeans the wrong way. And you can say, yeah, he was right or wrong. It doesn't matter. But one of the points he did make, he basically gave the Europeans the green light to accelerate conflict with Russia. So from an investment perspective, you see where all of this is going, and it's going to have a huge impact on all markets, but a few specific markets especially. So as the objective manager, these are the kind of things we look at, and people think, oh, you're talking nonsense about this and that, and no, this is where the world is going right now. So do governments want to default on debt? No, absolutely not. If they did, they would have done it long ago. But because of that, we're going to, for example, when we had the Canadian election a few months back, do they talk about the economy, productivity problem?
No.
No, they found the external threat to the country, and that's what it was all about. Distract everyone from what's happening domestically. So this digital ID story, it will come if the Brits are able to launch it. It will come to Canada next as well. And I won't be voting for it if they put it to
Keith,
a vote, which they won't.
That's the joke. The joke is now that Keir Starmer, who is he is hated. Like I think his approval rating is literally the lowest that they've ever recorded. And what's fascinating about the digital ID thing is that it's actually uniting Britain, which is really funny. So they did like a survey of they've done surveys. There's a petition online with I think 2.5 million people who have signed a petition against the digital ID. And they did a survey across party. And whether you're left wing or right wing, basically everybody sort of hates it. And we've seen it before. We saw it during COVID with the playbook. If you didn't have your vaccine pass, you couldn't go see a movie or walk on the beach or go skiing or whatever. And the other thing that's really important is that all the supposed benefits, which is like ease of use, that remains unclear. But I forgot to mention it. It's already illegal to work in England or UK if you don't have the right to work in England, right? So it's sort of a solution looking for a problem. The other thing that I thought you would love, Keith, I don't know if you knew this little wrinkle, is the company that's meant to be sort of that's being anointed as the one that will roll this out, and it won't be cheap, is apparently run or operated or owned, I can't quite remember, by Tony Blair's son.
Of course it is. So what's
I thought you were going to
interesting?
say it was GC Strategies.
No.
Well, let Steve hop in here. But if the polling is so negative towards this, if you're a government and you're truly running your country for the people, then you would say, hey, either they're not being very clear, trying to sell it, or you would just say, you know what, everyone is right. We're not going to do this. So let's see what happens. Do they dig their heels in and go with it, or do they say, no, we're going to continue? If they continue with it, that's when you have to ask the question, okay, why are they doing that? Like, nobody wants it, but yet they're going to go ahead anyway. And I maintain it's because they can see the same stuff that that I see. They have this, the debt market is about to go pop in the UK, in Europe, and elsewhere. So they need to control how that message is sent. By the way, everyone, this is the last episode of the Loonie Hour. Because isn't Ottawa also looking to put through a new, I think, like hate speech law or something like that?
Yeah, that's also crazy. Bill C-68 and Bill C-8.
What was the
and
last
C9.
one under Gilbo? It was like something like a heritage thing.
Yeah, it was Bill C-21. They've rebranded. It's the same shit, basically. They don't put people in jail for violent crimes, but if you say hurty words, then they want to throw you away for life. It's a really dark authoritarian streak. And what's crazy, like people joke about it. It's like, just go on the BIS. So the Bank of International Settlements is sort of the central bank. They have excellent data, by the way, which a lot of the debt stuff that when you do cross-country comparisons, that's where I get it from. There's a guy who's very large and kind of cartoonish, and he's the general manager of the Bank of International Settlements. And he literally has like a 10-minute video of why he thinks central bank digital currency is good. And for like 4 minutes, he literally says, well, we can control how money is spent and where it's spent and how long people, like, they outline exactly what the reason they're pushing this thing for. So just go on the video, go on the website, or just
it would
YouTube
definitely be tied to, like Keith's point, it would definitely be tied to like a carbon emission type
of course.
thing where, hey, you've already flown 3 times this year. Sorry, sir, you cannot purchase another airplane ticket.
Yeah. And it's dark. It's a dark.
I mean, it's a slippery slope, really, is what it is. It's just, it's just a slippery slope.
But you wouldn't go down that path unless you're concerned about something else happening.
Right.
Do you see my point? Or if not, it means you're just evil. Like, and there are evil people in the world, but I don't think evil minds are kind of trying to create a digital ID and a central bank digital currency. Like, they're doing other things out there.
But it's like, so no one asked for it. It wasn't. Oh, sorry. One last thing, and we can switch. But like, it wasn't on their election manifesto. That's the other thing. So in the UK, every party will produce an election manifesto which outlines the things they're going to do or not do or whatever. Mark Carney was going to build back better and whatever. Sorry. But in the UK, they take these manifestos seriously. We're going to raise taxes. We're going to cut taxes. We're going to do this. We're going to do that. And it wasn't in their manifesto. They just, out of seemingly nowhere, but of course everybody knows Tony Blair tried to do it, they've come up with this plan. And I don't think the British will have it. It'll be really interesting to watch what happens.
Man, maybe this is why gold is doing so well.
Yeah. Well, it is a fair point, though, because gold is telling you something is happening. Because think about it, gold's been
what is this?
like,
Rich, I think, is this like the best year for gold performance since like the 1970s, since we came off the gold standard?
I should probably know that off the top of my head. I don't. I will do that and share that. But yeah, probably. I mean, it's really not good. That is not a good signal. When you see gold up 43% in 1 year, or whatever the number is now, I can't remember now. 46 as of yesterday. That's not a healthy sign.
And it does suggest something else is happening, underneath the hood. What else you got, Steve? What else you got, man?
120,000 on Bitcoin. I don't know. Seems to be a correlation here. I don't know. I think that's it. I think that I just would not want to be a policymaker today. I think that, as Keith has alluded to, I think we're at the end of this sovereign debt bubble, and governments are trying to keep it all glued together. And I think that they're going to get they're going to grasp harder. They're going to reach for things like, digital IDs and CBDCs to
to try to keep social cohesion together. I just think, I think the core message is just volatility. I just think that we live in interesting times. That's all I got. So October 21st, you can come hear the three babbling turds in Vancouver. We'll be doing a Loonie Hour live podcast in Vancouver at Robson Square. We'll also be doing a housing panel with Dan Foch and Nick Hill of the Canadian Real Estate Investor. So if you have any sort of interest or want to come shake hands and have a beer with us, we'd love to meet you all. October 21st, there is a link in the show notes for an Eventbrite page. Still some tickets available. Would love to see you all. And as always, guys, we appreciate the support. If you enjoyed this episode, all we ask you share it with one friend or family member so we can continue to build a Loonie Hour community. And we'll see you next week.